This is curated currency. This is a NASDAQ market observation. This is not a signal. Today we're looking at NASDAQ on the 5-minute time frame. And what stands out about this session is how the market gradually transitioned from recovery into full downside control throughout the day. If you glance at this chart quickly, it might just look like prices drifting lower. But when you slow down and follow the timeline, you can see the phases clearly. Early selling pressure, overnight recovery, a failed, morning rally, and then a strong expansion to the downside. So let's start from the left side of the chart and walk through how the session unfolded. Around 1800 moving into 1900, 2000, the market begins with a clear downside pressure. Price pushes, lower with momentum while the rebounds remain small and controlled. This tells us that sellers initially control the pace of the market, but instead of continuing straight down, the seller momentum begins slowing as the session progresses. Between, 8 o'clock, 2300, price stabilizes and begins recovering. The market climbs gradually in waves rather than exploding higher. By the time we approach 10 o'clock into 11, the earlier sell pressure has largely been absorbed. This gives the impression that the market may transition back into bullish structure. As the overnight session develops around midnight, through about 2 to 3 o'clock in the morning into around 5 in the morning, price continues to push higher. Higher highs form and the market reaches the highest levels of the entire session from 5 to 6 o'clock. And at this point, structure briefly appears bullish. But this also is where the session begins setting up for that next major shift. Around 6:30 through 8 o'clock, toward around 9 o'clock in the morning, pre-New York open, the market, it stops advancing. Momentum slows and price begins forming lower highs. This is where the overnight bullish structure begins breaking down. When markets fell near the highs of the session, reactions can, become aggressive in the opposite direction. Around 9:30, the, New York open, moving toward 10 o'clock, volatility expands sharply downward. Large red candles drive price lower with urgency. This becomes the clearest expansion of the entire chart. The market stops negotiating and begins trending, decisively, I would say, to the downside. The market just went crazy to the downside, man. Crazy, right? But following the strong sell-off, the market begins reacting. From roughly around 11 through midday, price rebounds and pulls back repeatedly. However, each reaction forms lower highs, signaling that the broader market condition remains bearish. Now, as the afternoon session develops, the market continues drifting lower. Rebounds appear but are followed by continued pressure downward. This behavior reflects distribution after expansion. The strongest move already occurred earlier, and the market slowly continues in that direction. With that being said, the key lesson from this session is that failed structures often lead to the strongest moves. Let me say that one more time because it's very key. The key lesson from this session is that failed structures often lead to the strongest moves. Failed structures lead to the strongest moves. This chart shows an overnight recovery that ultimately failed near the highs, leading to a powerful downside expansion. Understanding when structure fails can help traders recognize when the market is preparing for that next larger move. Same system, different day. This is curated currency.